All right, here we go. Stocks by the numbers. Welcome back. Quick update as per request on Fubo TV, symbol FUBO here on the New York. Stock closed 3 even, down a dime, 3.25%. It's up a couple of cents after hours right now. And in the numbers, I say, in my opinion, I do think it's undervalued in and of itself. Again, I will reiterate it. We got the news of that Disney deal coming through. The stock spiked up. You could see top left hit a high of 645 and has since been channeling downward. Last earnings report, we got the update from the company saying that they may start to see a slowing and a potential decrease in their subscribers. And we can see a very slight miss on the revenue by 2.5 million, or about 0.5%. Nice beat on the EPS, though, posting a loss of 11 cents. They were expecting a loss of 17.7 cents. And basically, I just wanted to show in the technicals as well that last quarter we gapped down, and you can see we kind of had this tight rising wedge, which is bearish, and then we had a break. And now you can see recently, let me zoom in, you can see recently we were in a tight rising wedge, and now today it looks like technically we had a break. So we had the test of the 20-day moving average, you can see there, and then we bounced back a little bit, closing with a tight little candle. But my main concern is that, again, if we wedge and then break, wedge and then break, Wall Street may actually bring this stock down going into earnings as opposed to gaining some momentum because of the weakness that they cited last quarter. So you could potentially actually see this fib right here of 263 and this trend line down here about 260, it looks like. So in my opinion, that's the level I'd watch. Again, this is more, for you short-term traders. Long-term, most people told me that Fubo's been doing well. Now if they are combining it with Hulu and there's millions of more customers, it should get better. So even a lot of people who bought in, here at like 4, they're not really worried. And a lot of you are saying to me and everyone in the comments that, you're holding on for the long term. Of course, I'm speaking in the short term, the next couple of days going into earnings. If it does happen to drop, you may want to set a stop loss or something. Again, that's entirely your own prerogative. But earnings coming out Friday before market open, right? So if you did want to do options, you'd have to do that tomorrow before the close. And analysts are expecting a loss of 9.5 cents a share on revenue of 415.45 million. And kind of hard to gauge, right? But technically, again, even when we miss lately, they've been very, very slight misses. And of course, before that, we were very, very consistent, if you will. So in my opinion, I'd say it'd probably be hard to bet against the company going into these earnings. But I just wanted to point out these wedges and this potential break that we're seeing, just to let you know that Wall Street could potentially bring us down before we go up. But, I'd probably give them the benefit of the doubt. And, the problem is if we do happen to drop it down going into earnings and then they miss on revenue or something again, even if it's a slight percentage, if they again say like, yeah, we saw, subscriber growth was kind of weak, we may actually see a breakdown. But again, in my opinion, over the long term, I think the stock really should be fine. Again, the stock on its own merits before this Disney news was up to about $4, right? And since then, we've had a lot of earnings beats and a lot of good updates since then, right? Again, last quarter a little rough, but this whole time they were keeping it down, the company was doing pretty well. So that's why, in my opinion, I always said like $4, $5, $6 even really shouldn't be an issue. But again, off the initial news of Disney, stock jumped up to 645. So in my opinion, I know it's kind of like a simple logic and common sense analysis, but in my opinion, that's probably at least what the stock is worth, I'd say. Especially, I know the DOJ supposedly investigating the Disney Fubo deal, but hopefully, again, there's no issues that arise. They say it's all right. And in my opinion, the stock really should come back up at least to this trend line. So that's why you really should see, like the 6s and the 7s once that passes. But we had a recent price target maintained by Wedbush, 640. Again, on the Disney news, stock popped to 645, right? So Wedbush may be feeling that that's, again, like I said, that's basically what the stock should be worth, right? So pretty simple logic, price target update right there from Wedbush. DOJ probing Disney Fubo deal. U.S. Department of Justice investigating Walt Disney's acquisition of a controlling stake in Fubo TV to determine whether the combination would dominate the market for sports streaming. Does Disney do much sports stream? I mean, I know like ABC and they have, college football and all that stuff, but isn't like Amazon also doing like football games? And also, don't all of these sports organizations have their own apps now? Isn't there like the NBA app where you can like pay them a couple of dollars and you can see all the games? The MLB app, right? I know I only watch MMA, so I'm a little more familiar with that, but I do know that like the UFC, I know they have the UFC Fight Pass and whatnot, and they're on, well, actually, yeah, that's ESPN Plus, the app. But I do know that there are other avenues for sports streaming. And it's funny too, right? If you think about it like this, because actually, in my opinion, this should show significantly more value in Fubo, right? Because what they're saying is, I guess Disney, okay, they have some sports. Again, excuse me, I'm sorry, not an expert on, the sports streaming that Disney has under its umbrella at the moment. My apologies. But in general, right? If Disney's streaming some sports, whatever, and Fubo's streaming a bunch of sports, and now you're going to combine them and you're going to say you kind of cornered the market. What that tells me is, in my opinion anyway, it shows that Fubo is the powerhouse. Right? If Disney goes through with this deal, then it'll potentially be a massive monopoly, if you will. I mean, I guess that's why they're investigating it. But, cornering the market, so to speak. But you understand what I'm saying. If the absorption of Fubo would do that, then almost by the transitive property, the value of Fubo is more than people realize. Right? If this is true. So believe it or not, actually, in my opinion, I actually think this is good news. I think this is good news because on one hand, if the deal goes through, right, and this investigation, let's just say, goes away, they didn't find any issues. If the deal goes through, it should technically, on paper, become a powerhouse stock because now you combined, right, these two conglomerates, if you will, cornered the sports market. So now, boom, there should be mad value coming in. And also on the flip side, if, as I said, the absorption of Fubo would corner the market, then even if they come out and say that the deal really can't go through because of that, believe it or not, in my opinion, that should explode Fubo in value as well. That's just my opinion. Again, technically I do have a position in Fubo. It's, again, just a handful of shares. Not going to change my life. But again, I'm just looking at this through like a general lens, not necessarily as someone who, oh, I own Fubo, this could be good. No. Even if I didn't have a position, I would be saying what I'm saying right now. Because I think from a business perspective, I think what I'm saying makes sense. And of course, only time will tell, but in my opinion, I would remain positive. Fubo is continuing to work through the regulatory process of our business combination with Hulu Plus Live TV. We do not have a comment or status update at this time. Yes, they shouldn't say anything. It should be up to Disney. Disney did not immediately reply for a request. Okay. DOJ probing Disney. Anyone else saying anything different? No one responded. Probing. Fubo to retain exclusive rights. Broadcast Premier League in Canada, beginning with 25-26 season. Beautiful. Yep. Earnings coming out Friday. Conference call afterwards. Just double checking, making sure we didn't miss any news. And this was from last quarter. And this was almost 2 months ago again, after last quarter. Price target raised from 2 to 3.5. So that's why most people see more value here than what we're currently seeing, which is why I said, in my opinion, as we began to chunk it down, I was saying overreaction, right? Again, it was down here, 260, 250. Stock was 4 on its own merits, right? So in my opinion, it's worth at least 4 or 5. Plus this Disney deal, that's what I mean. Now it makes it, what, 7, 10, 11? We don't know. Only time will tell. But again, in my eyes, whether the deal goes through or not, it doesn't matter. Fubo was the rising star. That's why they got approached. That's why, again, they were asked to, hey, listen, let's sweep this, these legalities under the rug. We'll throw you a chunk of change for your time, for your legal fees, and we'll just absorb you, and we'll become one big happy family. Fubo had the value. Retaining that. Okay, I'm just double checking. And yeah, that was back from last quarter. But let's go to stock charts real quick. RSI on Fubo, middle of the road, 49.5 basically. You can see the tightening again with the drops. And then we come up, we tighten, then we drop. Right now down to the mid-Bollinger Band with a little bounce off at 293. So that could be the first level you have to watch. And also, if we are breaking down out of the wedge now, preparing to drop to that 260-ish level over the next couple of days, you can see that the fib was 263, the support trend line's about 260, and you have the bottom Bollinger Band at 266. So those couple of levels to watch. And of course, if we break, you may see a test of the moving average 230. MACD technically crossed to the upside a couple of weeks ago, but again, we were in this rising wedge and technically also rejected off the moving average and broke. So that's why I think we may actually see weakness instead of strength over the next couple of days going into these earnings. But of course, because it's been beaten up so much lately, if they do happen to come back and beat on EPS and revenue and say, oh yeah, by the way, subscribers are okay, we may not lose as much as we initially anticipated last quarter, then boom, the stock should really rocket back up to like $4.50, $5 a share, but we'll see. Top Bollinger Band, 502. Was bouncing, right, but wedging above the mid-Bollinger Band. Now it's rejecting off the mid-Bollinger Band with a potential break. 50-day moving average on the weekly, 214. That would be extreme. But you never know. RSI on the weekly, 53.5. Let's check the pivot points. Okay, you can see we're staying above this resistance level here of 274, so that's going to be another key level for you to watch. And of course, if we happen to have a nice beat, you can see resistance 404, so we could potentially see a bump straight back up to 4 plus. On the drop down, what do you know? On the daily now, we're looking on the daily at the pivot points. Fib level 263, support trend line 260. Bottom Bollinger Band 266, I believe. And here you have a support level 261. Also on the upside, 329 and then 366. First, you have to get above the 50-day of 311. Also on the pullback, you can see the 200-day at 231, support level at 230. So bad news, that might be the price we go to. Looks like a lot of action over there. Again, could see the pullback to around the 260s. If we report negatively, could see the break to the 230s. If we report well, we technically should run up to the high 3s, low 4s, really no problem. But that's just my opinion. But just wanted to do a quick update on Fubo as per request, show you guys these wedges, and of course let you know earnings due out Friday morning. And quick update here on the earnings. I'm not going to go over all of these, but just wanted to quickly just show you guys that markets were red most of the day. We started to rally like the last 30-40 minutes. All three major indices go green going into the close on the hype of these big names reporting earnings. And as you see, looks like more green than red, right? We have Meta beating on the EPS and revenue. Microsoft also. Robinhood came in with a beat. Qualcomm beats. eBay, I was looking at also. eBay beat. I don't really... ALB, Sprouts Farmers Market, I know a lot of people jumped in because, you know, this again is kind of more of a like domestic produce play. I know we spoke about this in the past in my Trump video, but SFM, you can see beats on EPS, beats on revenue. For the most part, again, you can see more green than red, but of course, everyone's looking at the big tech names. That's why they're at the top. And for the most part, you can see good news. So we should, technically, in theory, be up tomorrow. Enovix was another one I know you guys were watching. Prudential Insurance. What did I say about insurance, too? I said, in my opinion, I would actually stay away from insurance stocks under Trump. Pilgrim's Pride. Oh, PPC. Let me see. One of my favorite stocks, real quick. PPC is down 8% on the slight miss on EPS, really? Well, still, if you recall, PPC, again, this is a chicken company that none of you pay attention to, apparently, and originally brought to you on this channel in the low 20s. As you see, stock was up into the 50s. Allstate Insurance, what do you know? With a miss, what I say? What I say? Just too damn good, baby. Waterworks would it be? Cheesecake Factory beat. I guess that could be a good sign if you're playing like Portillo's or, you know, some other like food, restaurant stock like that. MetLife, they beat on revenue, they missed on EPS. What do you know? Every single insurance company with mixed reports. You're welcome. Sleep Number, yeah, I'm surprised they beat revenue, huh? I don't, you know, it's funny because you know, you always see those commercials. It's a publicly traded company, right? They've been around for years. I don't know anyone who has a Sleep Number bet, but, you know, good for them, I guess. Teladoc, again, this is like health, conversations and stuff with specialists over the phone. You can see that because it's the convenience, right? So something like Teladoc, in my opinion, probably will be fine. Because again, if they start going after, you know, insurance companies and pharmaceutical companies because they're charging too much for drugs, blah, 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 that shouldn't really impact, you know, like phone health, if you will, something like T-Doc, right? Even if they go after insulin and they lower the cost of insulin by 80%, like it doesn't matter, right? If you need to talk to your doctor, you're still gonna, you understand what I'm saying? So something like T-Doc actually might be a decent play moving forward. But yeah, I was just going down the list. I wanted to look at a handful of names. FTAI Aviation. I think this was one I said, in my opinion, was pretty overvalued. But we can see a miss on the EPS and on the revenue for FTAI. Herbalife. Okay, Hotel Resorts would have beat. Just quickly going down the list. Vici misses. Aflac Insurance, what do you know? They miss on the EPS and revenue. I'm telling you right now, I am too damn good. Do you understand? I really don't think you do. I really don't think you understand how good I am. And if you called up a broker at, you know, Chase or Morgan Stanley right now, I'm telling you, we are doing much better than they are. I am very convinced of that. But yeah, I wanted to look at the insurance companies and update you on those big tech numbers as well. Also, interesting, I noticed Netgear, as you see, posted net income positivity. We're expecting a loss, and we brought in about 10 mil. More than analysts were expecting. Netgear could potentially be in play. I believe last time I looked, it was up about 10%. Wyndham Hotels, EPS beat, revenue miss. Yeah. Yeah, I just wanted to look at a couple of names with you guys. Anything else? Anything else that's catching my eye? No, I don't think so. Sturm Ruger reporting. These numbers are out already. They should be. And we're down 7%. I just want to see out of curiosity. Yeah, miss. Uniquely positioned navigate. Yeah, it's funny. I thought the firearms would do well. Again, you guys know I was speaking highly about Smith & Wesson, which, in my opinion, I do believe over the long term is actually still undervalued. But, you know, they came out and they said, yeah, you know, we're seeing some weakness. It might continue. So that stock dropped, even though it did bounce back. Coca-Cola Consolidated. Oh, my goodness. All right, we're turning into a very long video here, but Coca-Cola Consolidated down 1 1/3%. What happened here? Revenue fell. Let's see. Revenue fell to 1.58 billion from 1.59 billion a year earlier. That's what I'm saying. Even when you get bad news from a company like this, it's still not that bad. In my opinion, over the long term, I do still really like it. Again, first video looks like it was back here early 2023 with the stock at 500 and change. And of course, we're up here 1,300. We hit almost 1,500. And also an update here, you can see in about 4 weeks, going to the end of May, this company is doing a 10-for-1 stock split. Meaning that at the current price, instead of $1,355 a share, it will only be $135 a share. So a lot of you who have seen this growth and potentially missed out on it, again, if you can't afford, you know, $1,000, $2,000 a share for some of these stocks, and believe me, I understand, after the split goes through towards the end of May, this may be something that you potentially want to keep an eye on, in my opinion. But yeah, that's pretty much it. So I'll end it there. Once again, Stocks by the Numbers, I want to thank you for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.